Welcome back to the long game. Today will be our second episode, which will be all about the ultimate Philippine REIT tier list from flop to portfolio staple. My name is Franco.
And I'm Jarrod.
Right, so this will be a little fun for us because we will be ranking every REIT in the Philippines except for DDMPR due to conflict of interest. So 7 REITs in total will be ranked. I've seen this tier list on TikTok a lot
Yes.
before.
Also in my YouTube shorts.
Right? They rank literally anything
Yeah.
from movie characters.
Favorite WWE wrestlers.
I bet that's all you see.
Yeah.
They even ranked the alphabets on a tier list.
What?
Yeah, it was actually
Like the
pretty
letters?
funny. Yeah, they ranked the letters and the numbers also.
Which is
Yeah.
what's the best letter? What the
I think the best letter was either A or D for some reason.
it has to be a vowel.
I don't know. And then the numbers, I don't really remember, but I think like 7 was above there, was up there, and then yeah.
Not 6, 7.
Oh, please don't. Okay, let's get started. So these REITs that we're going to be talking about, they're all para eligible. So what does that mean, Jared?
So once you open your DragonFi Para Plus account, you will be able to buy any of these REITs and you will receive dividends tax-free.
Yeah, so we just launched Para. So check your DragonFi app or web platform and open a Para account right now. You get so much benefits. Okay, Jared, we're going to spin the wheel.
Yep.
And we're going to decide which one will go first.
So let's spin the wheel. Wait. Okay. Find the wheel.
All right, what will be the first? So we went to this website. All right, spin the wheel, Jared.
Spin. Who is it?
Who will be the first one?
Oh. Okay, CREIT.
Okay, CREIT. Actually, one of my
Yay.
favorite REITs.
Okay.
Okay, you can click remove on that.
Okay. The tier list. Okay, let's discuss.
Okay, so CREIT is the best energy REIT in the entire sector.
Yes. So
And
this REIT holds solar land, right?
Yeah, of the Citicorp group.
Yes. So right now they're leasing just the solar land itself. So they're not yet leasing out the solar assets, right?
But it will happen soon, right?
Yes, the management did say that they plan to infuse it in the future.
Yeah. Okay.
So let's look at its
Financials, operational
first.
highlights. Okay, so for the first 9 months of 2025, total revenues surprisingly decreased by 0.3% to 1.4 billion, mainly due to accounting adjustments under PFRS 16, which has something to do with how their lease agreements are moved around or recognized for this
Yep.
period.
But this is a non-cash
Yeah.
item.
So
yeah.
technically, they didn't really lose cash.
It's more a flat lang,
Yeah.
right?
And we honestly didn't expect a huge jump like AREIT and RCR because they haven't infused anything.
Yeah.
Yeah. So, but direct costs only grew also 1.3%, so not that big, resulting in a net operating income of 1.3, an increase of 0.4%. So, I mean, net
Yeah.
operating income still increased, so that's not so bad.
Yeah. So but it's just flat, right? So
Yeah.
there. Then net income was down 0.5% to 1.03 billion. So really nothing for growth unless they infuse any assets, right? Either more land or they infuse the solar panel themselves.
Yeah.
So there.
That'll be interesting because with the solar assets, they'll be generating a different revenue stream, sort of.
Yes. And actually, we asked the management and they said it costs a lot less to maintain the solar panels
than the land.
Than the land. yeah.
Really? Wow. I thought it'd
Yeah.
be harder because, eventually if dust builds up, you're going to have to like wipe it off
Well,
the solar
you have
panels.
to pay the taxes, really.
Right.
Unlike if it's a solar panel, well, like there's no tax for that,
Yeah.
right? So there. So CREIT has a total of 14 land assets right now. and it covers over 7.1 million square
That's the
meters.
largest REIT in terms of square meters.
Yes.
Yeah.
So why this is so is the other REITs, they can build up because they have a building, right? So the square meters, like it's parang one square stacked upon one square, right?
Yeah.
It's building up. Unlike C-REIT, it's really flat land, right? So they just need to put their solar panels, then expose it to the sunlight, right? So
In the optimal angle. So
yeah.
it maximizes the sun.
So that's why their GLA or square meters are a lot larger than the rest of the REITs.
Yeah.
And they also have a 100% occupancy rate and a WALE of almost 20 years.
The longest one in the industry.
Yes, and I think it's the longest legit one because I think the other
Yeah.
REITs WALEs, they're
REIT has a 100% occupancy rate, but
Yeah.
we'll get into that later.
like E-REIT, I think their wall is long because of the Palawig lot, right?
Yeah.
So that sort of inflates it, right? But if you really look at the actual land, right, then the longest wall is really C-REIT. So there.
And that's great because earnings visibility is like 20 years.
Yeah, you don't have to worry. For 20
Yeah.
years, the REIT will continue to pay dividends.
Just hopefully, we just have to hope it rises every year.
Yeah. Then dividends so far flat. So they declared 0.049 for
Yeah.
third quarter this year.
But that's still 100% of their adjusted funds
Funds.
from operations.
Yep.
So yeah, they're the only REIT that pays out 100% of their AFFO and more than 100% of their distributable income.
Yep.
Yeah.
So everything. So once they adjust all the deductions from depreciation, that's all the cash earnings. That's what they give out.
Yeah, there may be some concerns maybe eventually down the line once they have to start paying their debt because they are also the only REIT with debt that they use to finance their acquisitions.
Yeah. But
The management is not worried.
they said they'll refinance it
Yeah.
now, so not really a concern. So for the first 9 months of 2025, the dividend per share was 0.147. So that's actually 72.19% of our full year estimate. So actually that's sort of behind, right? My estimates.
Yeah, a bit. I was hoping for at least like 75%.
Yeah. So it's actually behind. And for it to meet my full year estimate of 0.204 per share, the next quarter has to have a dividend per share of 0.057.
So we have to hope that the variable lease income is huge.
Yes, which it's not impossible because last year their fourth quarter dividend was
50.
0.055. So
Yeah.
they have to increase it by 0.002.
So that doesn't seem so hard to do
Yeah.
but then given how their rental income for the first 9
Yeah.
months is flat.
I'm not expecting anything. Like if they just retain 0.055, I wouldn't be surprised.
Okay. So you wouldn't say so if they miss your estimate, it's not so bad.
It's not so bad because they did say like in their last briefing that there are some delays with like land permitting and all those. So they're moving it to first quarter
of
for the
2026.
for the land infusion.
Okay, that'll be interesting. All right, recent developments. So its sponsor, CREIT, another tradable stock, although it's not para eligible, so you can't really add that to your para portfolio. It recently energized 42 megawatts of its Citicore Solar Pampanga 1 and 197 megawatts of Citicore Solar Batangas 1 with 320 megawatts of battery energy storage system, the first one in the Philippines that can dispatch baseload power. And then it has more of its solar projects in Batangas, Pangasinan, Quezon, Negros, Occidental. Yeah. 1 gigawatt for the next 5 years annually, right?
Yep.
That's the plan.
And this actually still benefits C-REIT because of the variable lease component. So imagine once all the solar panels are energized in where C-REIT's land is located. So you'll see a bump in the fourth quarter dividend which has that variable lease agreement, right? So it's actually pretty good for C-REIT
Yeah.
in the long run.
All right. So what's next? What are we looking out for now for CREIT?
So aside from the land infusion, which C-REIT said that they will do it in batches, right?
How many batches did they say?
Unsure.
Unsure. Okay.
But I think they'll have like one or two land infusions. Then they'll infuse the solar panel.
Wait. So land infusion first or solar
Land
panel
infusion
first?
first.
Okay.
So there.
So that means are we expecting 2 infusions in the first quarter of 2026?
I don't think first quarter, maybe like per quarter.
Okay. Okay.
So, but
to
first
clarify
quarter
that.
there should be a land infusion.
That's great.
Yep.
Maybe that will push them to 10 million square meters.
Sana, right? So I really like the solar panel idea because it's like you're leasing it out as an equipment, essentially.
And you're leasing it out to sister companies
Yeah.
that will never really go to anyone else. So you will guaranteed more or less 100% occupancy rate.
Yep. And especially right now with the REIT IRR being revised, right?
Oh yeah, that's a good
They're
thing.
including other assets that can be packaged into a REIT, right?
Yeah.
Like they were talking about like data towers, right?
Yeah. So for REITs that have an industrial segment like C-REIT and an A-REIT, this will be good for them, especially for A-REIT.
Yep. Or maybe down the line we'll have like a warehouse REIT, right?
Yeah.
Something like that.
Actually, remember Dell is revisiting their plans for a data center. So we might actually have our first data center REIT maybe next year or 2027.
And yeah, so I'm excited to see like once they finalize that IRR. So we can see like what is really the definition of the eligible assets to be packaged into REIT. Maybe C-REIT will find that, we can package more than just the solar panel, right? Maybe there's some kind of equipment that they can still lease out.
Yeah, and I guess that them being purely solar also adds some risk long term because right now I believe Aboitiz Power, Meralco, they're all studying nuclear reactors, modular nuclear reactors. So that potentially will affect solar assets because nuclear will generate more and technically does not require huge amount of land like all these solar farms. Yeah.
But I think that's why CREC, I think they had a partnership with Pertamina.
Yeah.
I think because Pertamina is into wind or hydro.
Yeah.
Right.
So they're expanding.
So that they can diversify their power mix.
Yeah, but that nuclear thing is like years from now. Because first of all, it's very capex heavy and you need so much expertise in managing a nuclear plant. So yeah, nothing to worry about in the next 2 years probably.
Yeah, and the nuclear race, that's a race between AP and
Meralco.
So any of them, hopefully in the next 5 years,
probably
will have it na, right? And that will greatly improve the power shortage.
Because I know Meralco has to observe one other country that's currently trying to do the modular nuclear reactor. So that's part of like one of the requirements they have to do. They have to make sure it works.
Yep.
Okay, so what else makes C-REIT so great?
So it's really just that, the stability.
The stability, yeah. If you want stable dividends in your portfolio or your para portfolio, C-REIT is something to add.
And also the pipeline.
So how would you rank this? Me, because they haven't really infused and because earnings has been flat, I would still put them in A tier because they have been so consistent.
Yeah, so I think because of the persistent delays in the land infusion, then the flat dividends, right? So parang it's like, for me, in my idea, it's like, how come dividends are not increasing even just a tiny bit?
Yeah.
So maybe the rent escalation's not really increasing, right? So, but because of the stability in the 20 years wale, so yeah, I'll agree with you. I would put C-REIT in the A tier. So let's do that. So C-REIT A tier. Okay. Wow. Okay. So
All right. Let's spin the wheel and see what's the next one.
okay. So next, let's see.
There.
Okay, let's go.
Who is it going to be?
RCR.
Oh
Okay.
wow, RCR. That's another great pick by the wheel.
Okay. So
All right, so RCR, one of the better or faster growing REITs right now. It currently has, as of the first 9 months of 2025, 38 real estate assets with a total GLA of 1.2 million square meters. So it consists of 17 office buildings and 21 malls. So I think this is now more or less leaning towards becoming a mall REIT. So far,
yes.
their last few infusions have all been malls.
Yeah, it's generally almost like a 50-50
Yeah.
split in terms of revenue.
Yeah. But in terms of GLA,
It's a
malls
bit,
account for 53%, and then offices amount to
yeah,
46.78%.
the tilt is a bit leaning more
Yeah.
towards malls.
And they have an occupancy of 96% with a WALE of 4 years. And most of their tenants they have 46% in BPOs and 46% in retail. So it's pretty much split between those two. And then the rest is like traditional office space.
Yep, and they're actually more diversified than AREIT, I believe,
Yeah.
right?
The
So
geographically, they're also more widespread.
yes, I think that's their main selling point. So they're all over the country.
Yeah, they are. So that's one of the great things about RCR
Yep.
with their portfolio. Okay, so because they recently infused, the rental income grew 30% year over year to 7.6 billion because of the last 9 malls they infused in the third quarter of 2025. And then also, they also had the help of the full contribution of the 13 assets they infused in the third quarter of 2024. But this also led to a direct operating increase of 35% to 1.4 billion, but net NOI grew 36% to 4.8, resulting in a net income growth of 28% to 5.5 billion for the first 9 months. So pretty good growth.
Yep.
Yeah. So this also allowed their net asset value per share to improve to 7.20 from 6.96 pesos per share. Yeah. And plus RCR has no debt. Great, right?
Yep.
How about dividend growth though?
So their dividends increased to 0.106 for the third quarter. So this is up 1.1% quarter on quarter and 5.1% year on year if you
Yeah.
exclude the special cash dividend last year.
Yeah. So that's great growth, 5%
Yep.
over
So
year.
the 9 months 25 dividend per share is 0.3156. So that's actually just 71.67% of our full year estimate of
Oh, so there's a
0.4403.
chance that this might miss or no?
So my guess is next quarter they might have a special dividend because this quarter there was 2 months contribution of the 9 malls,
Mhm.
right?
Yeah.
So maybe once it's at a full quarter contribution, they might give out a special
I
dividend.
hope so. I
But
really hope that they do.
if they don't give out a special dividend, then yeah, it could miss our estimates.
Okay, interesting.
Yep.
Now for recent developments, I'm sure some of you guys saw earlier last month that RCR had a steep pullback,
Yeah.
right?
It had
And
a block sale, right?
yeah, block sale at 7.75 pesos per share. So RLC sold about a million shares to one raise the float of RCR, and another is to use it for other investments. But so meaning that now that they had a block sale again, does that mean an infusion is on the horizon?
Well, they can have an infusion without violating the minimum public float
Mhm.
requirement of 1/3, right?
Yeah.
So, but they haven't announced it yet. So maybe at a later date.
Yeah, but RCR stock price now has recovered close to 8 pesos already, especially after the MSCI rebalancing.
Yep. So it finally recovered, but
Yeah.
it was below the block sale price
Were you
for
able
quite
to
a
catch
while.
this?
Yeah, I bought
Yeah.
some close to 7.
You had a good entry, I remember.
Yeah, I added more
Yeah,
at
I also
7.
added to when it was trading above the 200 day. That's when I added more. Yeah. So RCR is really, I think, a great uh, investment, especially for Para.
Yep.
All right.
So what?
Another thing they also, since we mentioned the 9 malls that they recently infused, so they infused 9 malls, right, in the third quarter. The biggest mall that they added was Robinson's Magnolia with 72,000 square meters.
Yep. So that's like their most famous mall,
Mall. Yeah,
right?
I go to Robinson's Magnolia quite a
Yeah,
bit.
Rob Mag.
Yeah, Rob Mag. What I was hoping for was also Robinson's Galleria.
Maybe down the line pa.
Yeah. Another one they also did was Robinson Star Mills, and the second biggest one they added.
Mm.
Yeah, so they added good malls.
Yep.
Do you go to a lot of their malls?
Not in my location, so I mostly go to
What's the
SM.
nearest one? Mine is Robinson's Galleria. That's the
Mine,
nearest
it's
one to
like
me.
SM Makati, SM MOA.
Oh, that's the
So
nearest mall to you.
yeah,
Wow.
so it's mostly those.
All right. And then before that, they added, 11 malls and 2 office assets in the third quarter of 2024. Yeah.
So
So what's next? What are we going to look out for?
so for RCR, I think it's a main bet to enter the index next year
Mhm.
in February. So if there are no changes in the
Yeah.
index rules, right? Because they were circulating that
15% for at least 120
they might
billion
lower
in
the
market
float
cap.
requirement, right?
Yeah, and if they do that, AP is in, RCR might not be able to join because the only stock that is guaranteed or more or less will be removed because it ranks 36 below is AGI.
Yep.
So if only one is removed, that means AP under the new rules will join and RCR might be left out. But if the PSC decides not to change any of the rules yet, then RCR will enter the index.
Yes. I think there were also talks about the liquidity requirement. So maybe China Bank might be removed as well.
China Bank and SMC. Although SMC, I feel like lately they've been pushing it up
Yeah.
for
So
for
maybe
it so it can stay in the index.
yep.
Yeah, if you notice, it is already reversed from its lows.
So how about things that you don't like about RCR? Are there any?
What don't I like? Actually, there's not a lot. I don't think I don't like anything about
So
RCR.
there's no major red flag, right?
What? Why? Do you have any red flags?
Not really, but
Right? I'm
yeah.
thinking right now, and so far, I can't really think of anything.
Yeah.
Yeah.
So
The great thing about, but I can think about some great
okay,
things
so
about
sure.
RCR.
What is it?
So they're aside from AREIT, they have consistently grown their DPS dividend per share quarterly for about 17 quarters now since the IPO, basically.
If you exclude the special
Yes,
dividend.
if you exclude the special, they have consistently increased every quarter.
Okay.
Yeah, and then another thing. Okay, maybe now that I think about it, since they still have BPO exposure, although it doesn't seem like it's being talked a lot lately, like earlier this year, AI adoption and vacancies, office vacancies. I feel like that's one thing that might affect it. Although
They've been
not so
managing
much.
it
Yeah,
well,
they've been
yeah.
managing a lot better than most REITs, especially since they have a lot of retail assets now.
Yep.
It's not really a huge thing anymore for them, but it's still a risk that can affect them, but not drastically.
Yep. So then for me, one thing I'm also looking forward to is maybe hotel infusions down the line for
What
RCR.
else do they have? RLC.
They have a lot. Yeah. So hopefully we might see even more asset classes into RCR. Not just hotel. Not just office and
Yeah.
mall, right?
If you want to see what they can potentially add, you have to look at RLC's portfolio.
Yes.
Yeah, because that's usually where it gets their properties.
Okay, so how would you rank RCR?
Well, the best thing about it is the consistent dividend growth and infusions, especially with a bigger stake now in retail. I think this is an S tier REIT.
For me, I disagree actually.
Really?
For me, I think it would be an A tier.
A tier. What makes it an A tier for you?
So I'm still unsure about the fourth quarter dividend because
All
I'm
right,
not.
because it's close to missing your estimate.
Yeah, because it's only surprisingly it's only 71% of my estimate is so. it's really a 50-50 if they'll declare a special dividend. Right?
Right.
So I think that's just a short term doubt, right? Just very short term. But I think long term this is a good REIT. But because of that short term doubt, I would give it an
An
8
8
year.
year. Okay, that's a good point
So
about the dividends.
should we agree on 8 year?
Yeah, let's agree. Let's not. I shouldn't easily give away the S tier rank.
Yeah. So let's
Alright,
give
so-
it A.
Yeah. So that's the
Okay.
second 8 tier rank.
Yeah. Okay,
Right.
let's go for the next.
Yeah. What could be the next?
So let's see.
Give us a good one, or maybe something more interesting.
So
I think you forgot to remove DDMPR.
Okay, so we cannot cover DDMPR because of
Yeah.
conflict of interest.
All right, next.
Next. My favorite.
Yes, VREIT, the other retail
Okay.
mall REIT. Okay, this will be
This will be fun.
yeah,
This is fun.
because there's a lot to talk about.
So
in
for me,
regards to
I'll
Villar.
let's switch it up. Let's rate it before we talk about it.
Okay, easily for me, it's an F tier.
Oh really?
I'm putting it. Oh wait, no, E or F. For me, it's E or F.
Okay, for me, I'm an E.
Okay, since we've E.
Because I think there's one more that's worse than it. So okay, let's talk about VREIT.
Okay, so Villar stocks lately have had the worst reputation, worst headlines in the news, especially after HVN lost nearly all its value
Yeah, just for it to be pushed up again.
for some crazy reason after losing
Yeah.
90%, 97% of its property value and majority of the net income it earned
Yep.
because of the valuation adjustments.
So let's actually look at the financials, which, to be honest, I really don't trust. Right?
It's not great also, especially given that it's a retail REIT. It's still not doing great because for the first 9 months, total revenues decreased by 2.5%. And then excluding any fair value changes, operating profit decreased 4.4%
Yes.
to 1.3 billion. And net income it decreased 4.5%.
That's odd because all the other REITs with mall assets, they're all increasing in rental income, right?
SMPH's malls, Ali's malls,
Yeah.
Robinson's malls.
So this is like the outlier.
Yeah, so they have 12 malls in their portfolio with a total of 256,000 square meters with an occupancy rate of 96.5%.
That's the first red flag because the 96.5% occupancy rate has not changed since IPO.
Yeah.
So like how is it possible for like all these years there are no changes in tenants?
So, but we looked into it, and if you look closely, who are their tenants, Jarrod?
like 75% is all home and all day. But
All group.
it doesn't but the 25% are different. So like how is it possible that those 25% they're not changing, right? So how is occupancy rate staying a flat line, right? It doesn't make sense for me, right?
Yeah, but it's also very interesting that all their tenants are all day, all home, all value, all bank, coffee project, all
All
toys,
toys.
all sports, literally the all brands.
Yeah.
Yeah.
So
And it's also nice. Shout out to REIT Buddy because he also pointed this out in one of his posts.
yeah.
Yeah.
Oh yeah, there was even like a article
Yeah.
na parang it's a ghost town. The Vista Malls, they're
Are
a
a
ghost,
ghost
town.
town.
So like, and also if you walk to inside the Vista Malls, parang there's not much people, right? And if you look at the stores, they're closed.
Really?
Like yeah, it's literally like a ghost town,
town.
right? So it's hard for me to believe that it
Thriving.
sustains a 96.5%
Yeah.
occupancy rate.
And so far, they haven't had any reliable or any developments recently.
Yeah, there's
No
stagnant,
infusions,
yeah.
no nothing.
But surprisingly, their dividends, it actually increased the
Yeah.
latest one.
Yeah.
So for the third quarter, it was 0.0492, which is 5.4% higher year on year. But it's weird. So like the first 9 months, their income has been decreasing and yet their dividends are actually going up. So it's weird for me, right?
yeah,
There's
I guess
something
for
wrong.
shareholders who still have this, it's still like a relief that the dividends are
Yeah,
still
at least they're
increasing.
still paying
Because
dividends. right?
fundamentally, it raises a lot of questions.
Yeah. So if you just look at like dividend history and maybe financials,
Or the yield
you might
alone.
think it's like okay lang, okay lang.
Yeah.
But for me, I already terminated my research coverage on VREIT because I really think it's hard. The reliability of the data is kind of questionable,
Yeah.
right? So just to be safe,
And
right?
plus, if you go to their malls and you don't feel happy about it, then it's not really encouraging for a consumer because
Yeah.
it's empty.
So just again, what makes them not great is high concentration risk. So 75% of rental income is tied to all home and all
Yeah, and
day.
if you look at their stock, it's also down.
Yeah, their earnings are down. Their cash, I think it's
Da-
like going down.
Borderline zero,
It's declining.
declining.
And then the occupancy rate, which has not changed since IPO, so that's
Yeah, that's
very
interesting.
suspicious. And if you look at my research report on VREIT before, the title is high risk, high yield, right? So
Yeah.
you have a very high yield. I think right now 15% or 12.
I can check, but continue.
You have a very high dividend yield, but it's at the expense of very high risk, right? Because we saw what happened to Villar Land, right? Where once their 1.3 trillion investment properties valuation basically got erased, you saw what happened to their stock price. So it's not impossible for the same to
Yeah,
happen
and
to VREIT.
So, yeah, so their TTM yield right now is 14.67%.
Yeah. So really,
Yeah.
just
Again,
because it's a high yield doesn't mean it's okay,
so
right?
it deserves its ranking. And what to look out for maybe is, I mean, I don't know, change of management and infusions. I guess
Yeah.
that's it.
Yeah, that's
Yeah.
really it.
All right, let's move on to the next one.
Okay. Let's see. Oh my bad. Okay.
All right, I wonder what the next REIT will be. Only 4 more to go. Huh, that's funny.
Okay. Let's rank.
Let's rank the next Villar stock REIT.
Okay, so with in a heartbeat, this is going to F tier.
Yeah, I'm not even gonna argue with you there.
So
And it's very easy why it would go to the F tier, Jared.
yeah. So let's talk about the main thing. If you saw the news, Sipcor, Siquijor Island Power Corp,
Yeah,
they were suspended.
by the ERC.
Yeah, because of constant blackouts in Siquijor Island.
And then so it was a result of a lot of of operational and regulatory compliance violations because they could not supply stable electricity.
Yes. I think it was already replaced by another power company.
Yeah.
I forgot which one. But I think they already
Yeah, so
restored
that
power.
happened in August 29, and then in November 17, PREIT's board suspended their lease agreement with Sipcor.
Yeah. And it's funny because so once they announced that Sipcor was being closed, okay, the stock price already dropped. And then the company released a press release saying that or no, parang clarification of news
Yeah.
saying that Sipcor can still pay dividends. It can still pay rent,
I
right?
don't think so.
So, but the thing is, how can that happen if they're not operating? So
Yeah.
you're funding the rent based on the cash reserve of the company, not based on operational cash flow. So obviously, I'm not gonna believe that, and it looks like the market didn't believe it as
Yeah.
well.
Since August 29, PREIT has lost 43% of its value.
Yeah. And that's why if you notice November 17, once it was disclosed that the board suspended the lease agreement, the stock price didn't even move because the market already priced it in.
Yeah,
Right?
they were already like, this is
Because
not great.
like, okay, what's
Bearish.
new? We already knew that was gonna happen, right?
It was actually a penny stock for a while. Also, when
Yeah.
it dipped below
I
1
think
peso.
right now it's at 1 peso.
Yeah, 1
And
peso right
it's
now.
not gonna go up anytime.
So the yield is so high.
It's the
yield
highest,
right now,
15%, right?
15.21%, the highest in the sector of REITs.
Yep. So yeah, there's really nothing much to talk about period except don't buy it.
Yeah, because what? They have 8 assets, 4 of which belong to Sipcor, and now that they suspended the lease agreements, I'm pretty sure they only have 4 assets
Yeah.
now.
And the the rental income is like a 50-50 split between Zipcore and Capcore.
Yeah, their revenue decreased 5% to 431 million pesos
Yeah.
in the first 9 months. And net income decreased by 8%.
So I think that doesn't bake in like the full removal of Zipcore yet.
Yeah.
So I think next quarter
And
wala
I
na
think
yun.
this is the only REIT that hasn't declared dividends yet for the third quarter of 2025.
It's gonna be, if ever they do, it's gonna be very, very low. So there. And also I think I saw news articles that even Campcore they might look into it.
Really? Okay, let's
So-
see, because honestly, PREIT, stay away.
Yeah. So really, if there's the worst REIT in the market, it's really P-REIT.
Yeah.
So there.
And they also, I know earlier during their IPO, they were talking about infusing solar assets. So far, nothing has happened.
This bunker fired this.
Yeah.
So I don't know.
Non-renewable. This is the non-renewable REIT. C-REIT is the only renewable REIT. All right, let's move on to the next one.
Let's go.
All right, the last three are actually not bad.
Okay, one is semi-bad.
Okay, Jarrod was hurt by this REIT.
I've never felt more betrayed in my life.
Okay, so FILRT.
So let's talk about it first.
Yeah.
So FILRT.
So for the first 9 months, revenue was up 20% to 2.54 billion. Net income grew 15% to 1.02 billion.
Yeah. So these were as a result of the festival main mall infusion.
Yeah.
So revenues did go up naman.
20%. That's pretty big for one asset.
Yeah. Then occupancy, this is where it starts to get a bit shaky. So if you look at the fund manager's report, it's at 84% average occupancy.
Mhm.
That's actually lower than our estimated 86%.
Yeah.
So
meaning they
I
lost some
estimated
tenants.
86%, right?
So that means they lost some tenants.
So and the company guided 88% occupancy.
So they missed.
So they missed it by a lot, like 4%.
Oh, well, there's still the fourth quarter, but
yeah,
can they still find tenants to fill
they
up
missed.
4%?
And here's the thing, their wallet came in at 12.95 years. I estimated 14.72 years wallet, and the company guided 14.6.
So they missed again.
So they missed again, right?
Huh.
Then here is
disappointing.
the very main thing why it dropped, because the third quarter dividends was a very big disappointment, 0.057. So we estimated 0.065.
Because of the festival mall infusion.
Yeah, so
And
we thought that would be the catalyst for dividend growth.
I mean, technically it did happen. We bought for the strategic growth at
it
around
went up
below 320. It went up. We were up 15%.
Yeah, and then it just kept going down. Like
Yeah.
no breather, right? It's just straight
it just
down.
went straight down until the disclosure came out, and it went even lower.
Yeah. So definitely, I haven't fixed my model, updated my model yet, but definitely this will be a downgrade, either to hold or sell.
And you'll
So,
lower your target price.
Yeah, definitely the 3.97 will be lower.
Yeah.
So there, and yeah, dividends decreased 8.1% quarter on quarter.
Now,
So-
that's really disappointing.
For the first 9 months, the dividends of 0.181 only accounts for 71% of our full year estimate of 0.255.
Yeah, we're both disappointed. We were really rooting for FILRT to
Yeah.
have higher dividends after the festival mall, because it's their first infusion in a long time,
Yes.
or ever.
Yeah. No, they had the Boracay law.
Oh, okay.
Before.
Yeah. Oh yeah, I remember. Yeah. So this
Yes.
was the first one.
But
in a
that
while.
was a cash acquisition.
Yeah.
So this is the first property for
Property
shares
shares.
swap.
So I guess it's also the first non-dividend accretive
Yes.
infusion.
Yeah, that's the main thing. So, because in my opinion, like if there's something that's going to save FILRT, it's their crown jewel, which is Festival Mall, right? Because basically Alabang area, that's their area, that's their turf.
They
And
own
that's-
Alabang. They
That's their
dominate.
best mall. And yet, if that's not enough to save FILRT, then to be honest, I don't know what will.
Yeah.
Right? Even at 100% occupancy festival mall, I guess it's being dragged down by the office, right? The Alabang offices are really struggling.
Yeah.
So yeah, that's a big disappointment.
Anything to look out for?
So I think lease agreements, they're renewing naman a lot.
Yeah.
So
Most of the headlines I see on FILRT is just them signing new lease agreements.
yeah,
with,
new
Yeah,
tenants,
new
like
tenants.
this BPO, and then there's like a press
Yeah.
release. But what to look out for is you need to first see a dividend increase quarter on quarter.
Yeah.
Without that, for me, I must stay away from FILRT.
And
Right.
one of the risks for them being so concentrated in Alabang is that, according to a recent study by KMC Savills, the Alabang CBD has the highest vacancy rate of 36.6%,
Ow.
followed by the Bay Area of Manila, Pasay, and Parañaque. So Alabang has the highest.
So it's really being felt
Yeah.
right by FILRT's offices.
So according to KMC, there's a structural mismatch between available supply and current tenant demand. So it might be linked to hybrid or remote work, or because there's slower business expansion in the area.
yeah.
So
So
yeah.
if I were to give a recommendation to FILRT, I would recommend that they diversify geographically.
Yeah, they need to get out of Alabang.
Yeah. So Alabang is really struggling right now. But to be honest, it has for me it has the nicest infrastructure, right? But it's just the people are just not there, right?
Yeah.
They're in
I like Molito.
they're in the other CBDs like Makati,
Ortigas.
Ortigas, or even BGC.
There a lot of people are in BGC, Ortigas, Makati.
Yeah.
That's
The
like the
Neo Towers,
the
right?
most congested areas in Metro Manila.
So there are.
All right, so how would you rank this?
Okay. So I think the data of FILRT is accurate naman because they're not sugarcoating it naman right? So if they have if it's bad, then data's bad. We believe the data's bad, right?
Yeah.
Unlike VREIT, it's like they make it appear like it's good, but it's bad. Right?
Yeah,
So for me, maybe I would rank it a D tier,
I agree.
even if the dividends have been declining. I'm
just
think
disappointed with Festival Mall. So
yeah,
I'm okay with a D tier.
I feel like down the line it will have its
There's
time
promise.
to shine, right?
Yeah, it will have promise.
But unlike these two, I really cannot trust them. So FILRT maybe a slight chance I trust it again. So maybe D tier.
Yeah, okay, let's put it. I think you have to close the notification above.
Oh, I agree. Yeah.
Okay,
So
FILRT D tier.
D tier.
All right, last
Okay.
two.
So last two, let's see.
All right, spin the wheel, Jarrod. AREIT. Oh no, MREIT. Wow, saving the best for last.
So okay.
Okay, MREIT. This one, slow. It's slow. I mean, I'm not gonna lie. I've been waiting for its infusions, but it might happen soon, right?
Yep. So let's talk about the infusions first. So based on their latest analyst briefing, so we were really waiting for mall assets to be infused. But unfortunately, what they announced was
Teaser.
like a 200,000 square meter infusion for 10 office properties.
Yeah.
So still office.
Still office, no malls.
Yeah, this will be completed in the first half of 2026. So that will be around 20 billion pesos worth of
And it's
properties.
interesting because before they announced the malls, the office
They had a press
infusion,
release for
they had
retail.
multiple press releases throughout the year about retail infusion.
Yeah, and then it's gonna come way after ba? So
Plot twist, offices.
yeah. So it'll be 9 in McKinley Hill and 1 in Eastwood City.
Yeah, they
So-
dominate those areas.
Yeah, McKinley is their turf talaga.
Yeah.
And on average, the properties have an occupancy of around 95%.
Okay, so that's
which is
good.
good
Yeah,
because
that's
right
good.
now their blended occupancy rate is
92?
91.6.
91. Yeah, 91.6.
Yeah, that's actually an improvement because last time they were at around 88%.
Yeah.
So now they're improving their occupancy and the properties that they will infuse have a 95%. So of course, when you add them,
It increases.
the blended occupancy rate will go up.
My problem only with MREIT is that blended tenant mix is all BPO. 79% are still BPOs.
Yes. So a bit of a risk there.
Yeah,
right?
there's a lot of risk there
So,
regards to AI adoption and
It's
integration.
concentrated in office.
Yeah.
So that's I guess the main risk when it comes to MREIT.
So they really need that diversification.
Yep.
I wonder how many malls they'll infuse.
Yeah, I wonder too. So let's look at their dividend first. So for the third quarter, flat dividends from last quarter.
Yeah, unchanged.
So 0.250478.
But slightly higher year over year at
Yeah.
63%.
Yep. But it was lower than our estimate of 0.250872. But very slightly long. So
But this is very close to your estimate though, right?
yeah, very close. So for the first 9 months, their dividend per share of around 0.75 is 75% of our full year estimate. So it's more or less in line.
Yeah,
right?
it's in line. So by first quarter of 2026, when they announced their fiscal fourth quarter, yeah, it should maybe hit your estimate.
I think it will match my estimate. Like
Yeah.
be very close.
Okay, that's
So
good then.
At least, yeah.
Yeah.
That's why if you look at MREIT stock price, it's starting to recover.
Yeah, it's starting to recover above 14.
Yep.
And I guess one of the reasons why we can maybe expect that they'll have higher dividends is because for the first 9 months, rental income, because of their infusions, increased 33% to 4 billion, and the net income grew 32% to 2.89 billion. So, yeah, it's
Yeah.
getting there.
So good.
All the REITs really need infusions for
Yeah.
that jump, because without infusions, expect like rental income to increase 3 to 5% every year.
Yep. So after the 10 office building infusion, right, in the first half of 2026, MREIT then plans to infuse around 70,000 square meters of GLA in retail assets.
Yeah.
So if we look at Mega World, so they have 490,000 square meters in available retail GLA for future infusion. That's not yet including their pipeline of 157,000 square meters.
Wow.
So if you add
That's
them,
a
they're
lot.
like, that's around 650, 660.
I really hope that they hit their target of 1 million by 2027, though.
Yeah. So they plan to hit 1 million square meters of GLA for MREIT by
Yeah.
2027. So that's ahead of their original target of 2030.
Because by so what's it now in 2030? Did they specify what their new target is? Or
So
no?
by next year, it will be around once they infuse the office assets, it'll be around 600 plus 650.
Mhm.
Then once they add the retail assets, maybe second half of next year, it will end around 750 square meter.
Okay.
750,000. So that's already
Yeah.
250,000 square meters left for their target for the 1 million. So management, they also said that the GLA of retail assets will be around 12 to 15% of total GLA.
Mhm.
So they're really an office REIT at the end of the day. So the retail assets, it won't be majority. It's only gonna be 12 to 15.
All right. So how do you rank MREIT?
So MREIT,
For me, I think it's a B tier. I'm putting it in B because of its promise of adding malls next year and reaching 1 million by 2027. So for me, it's a B tier.
same. For me, it's a B tier because they already have the pipeline in 1 million. They set the target and
Yeah.
they made the target even earlier by
Yeah.
2027. So they're not joking.
Yeah. For me,
around,
it's really
right?
more on its potential. Yeah,
Yeah.
that's why I'm ranking it B.
So yeah, same.
B.
I
Yeah.
will rank it there. So B. And another thing that management said is that next year they expect around 2 to 3% dividend per share increase in 2026.
Okay, that's great. Let's hope it materializes.
But that's already considering the 10 office properties and potentially also the retail assets.
So it will grow more probably next year.
Yeah.
Depending on how many assets they
So
infuse.
actually, this is what made me think. So if they're only expecting 2 to 3% dividend increase, considering that they have an infusion, so
Mhm.
if they don't have an infusion, we can only expect like what 1%.
Yeah.
So maybe that's the case.
Yeah.
So
Alright.
if that's the case, I might have to temper my estimates a little bit.
But yeah, MREIT though tradable is actually kind of tradable right now.
Yeah, try to buy below 14.
Yeah, as much as possible below 14. But given the current setup that it broke above 14, I guess,
Yeah.
you might have to catch on retests.
So yeah, there.
All
Okay,
right, the last REIT.
AREIT.
It's time for AREIT.
So let's rank it first.
Really? You want to rank it first already?
Let's rank it first.
Okay, for me, S tier.
Okay, I'll agree with you. It's an S tier.
Yeah, because there's a great thing about AREIT recently. All right, so we successfully ranked all. So why do I think it's an S tier? Well, starting with the dividends, it was higher than expected, coming in at 0.62 for the third quarter of 2025, beating Jarrod's estimate of 0.61%, of 0.61 pesos per share.
Yeah, I was actually surprised though.
Right.
Because my estimate was 0.61 this quarter, the next quarter 61.
Yeah.
But if they do 62 now, you know that they're not gonna
Go
decrease
lower.
dividends.
So it could be higher.
So
Pa.
it's gonna be 62 at least next
Yeah.
quarter. So that's a big beat in my estimate.
So that's why it's an S tier. Because
Yeah.
despite not having a lot of infusions as of late,
You really know that their
Yeah.
rent escalation's working.
yeah, the rent
Right.
escalation's working.
They can do it.
And plus, they have a 99% occupancy rate, blended occupancy rate,
Yes.
and a 20-year WALE. Is that correct?
But it's a bit inflated because
Of the industrial lot.
Palawig lot.
Yeah. Okay. All right. Just put an asterisk on that 20 years.
Yes.
Okay. So obviously, total revenue increased 33% to 9.5 billion, the largest in terms of revenue share in the sector. And then net income up 39% to 7 billion because of the full quarter contribution, of its 8 commercial properties.
Yep.
Central Block, Abriza, and Centrio.
Yep.
Yeah. So that was the latest one.
Yep. And their basically their 9 months DPS of 1.79 is already 75% of our full year estimate of 2.39.
With the potential to beat it.
Yeah. So I might have to increase my target price because it's a significant beat in my estimates. Then they also have another development. So AREIT, they announced their 6th property for share swap with Ali. So they will be acquiring 2 commercial mall properties. So Ayala Malls Feliz and Ayala Center Cebu. So the swap will be at 44.15 per share. But they did not announce a private placement yet because they will breach the 1/3 float if they go with it right now.
Yeah, so stay tuned for that because that will be an opportunity to add.
Yep. So we're also waiting for that so that we can.
I'm
add.
hoping maybe it will push it slightly below the 200-day moving average, about 41, and that's where I'm planning to add actually.
Yep. So they expect the property for share swap to complete by the second half.
Of 2026.
So by second half 2026, you will already see the income accretion from the 2 malls.
Yeah, that's great then.
Yep. So Feliz Mall is in Pasig City, but the thing that sort of bothers me about this swap is the Feliz Mall, it only has an 81% occupancy.
Yeah, it's not that high. Like compared to its others where it's like
Yeah.
above 90%.
It's kind of low. So I'm kind of questioning why would they
Maybe it's not
refuse
like
it.
the best mall that they have.
Yeah, it's just something that, you know,
It has matured and they can add it not to the
yeah, they can
portfolio.
add it and it's not really gonna hurt
Yeah.
dividends naman siguro,
But
right?
the next one, Ayala Center Cebu Mall, has a 91% occupancy
Yeah,
rate.
it's still kind of low to be honest. For me, for a mall.
Yeah, I
Yeah,
guess.
91. So the Feliz is 81%. The Cebu Mall is
So this will
91.
probably very tiny. It will drag its 99% occupancy.
Yeah.
but
So
very small because
the
these are just
blended
small.
occupancy rate will drop a bit. But
Yeah.
I think it's okay if the
For
dividends
sure
will
above
go up.
95%.
Yeah. So the rent escalation for both of the malls are
3%.
3% per
Okay,
year,
that's
which so far,
So far beats inflation.
yeah, they have been able to do naman.
Well, bad for the tenants, but good for the investors.
Yeah.
It's always
So
like that.
what makes me excited about AREIT is same as RCR. I want hotel, which
Already.
they already have, right? Because
I'm-
of the SEDA.
For me, I'm stretching it a bit that because of the new REIT law that might happen, that will be passed, they'll
Yeah.
infuse more assets from other companies under Ayala,
Oh, like
other assets under Ayala, maybe from Globe, from because
okay.
if you can put more different types of assets,
Not just Ayala land.
Yeah.
Like the Ayala ecosystem.
yeah, exactly.
Interesting.
That's what I'm looking out for, maybe in 2026 or 2027.
What couldn't they just make example Globe? Why not just make their own REIT? Why make it into a REIT?
I don't know.
Yeah.
We'll see.
We'll
We'll see what
see.
they do. But yeah.
Another thing, warehouses, logistics.
Oh yeah,
Cold
logistics.
storage.
Yeah, cold
Yeah.
storage. They can add that also into
All
their
HC,
REITs.
right?
Yeah.
So
Yeah. Aside from
potentially-
Globe, yeah, that all HC.
So yeah, that's really it.
That makes them great.
Yeah.
Everything we listed makes them great.
And consistent dividend
Consistent
growth.
since IPO.
Yeah,
Yeah.
dividends have never gone down. It's either stable or increase.
Yeah. So,
So-
that's it for our tier list. So we have AREIT on the S tier, CREIT and RCR in A, MREIT in B, FILRT in D, VREIT in E, and PREIT in last place in F tier.
I think this is a very fair list.
I think this is okay. This is good. If you
Right.
guys disagree, please leave it in the comments.
Yes.
If you guys want us to rank another sector or maybe the index, let us know in the comments. Maybe we'll do that for another episode.
that'll be fun. Like
That's
the
30
PSEI
stocks, though.
30.
That's
like,
a lot.
So we'll have to do it fast
Fast.
lang.
Yeah. And then there's also DivY also if you guys want. Or the best dividend paying stocks right now.
Or
You can do that.
how about an idea? Like what if we had to recreate the PSEI 30? How would we make it?
Yeah. If you guys want to see that, let us know in the comments.
Or how would we design things if it's not the
If it was
PSE
up to us.
Yeah, if it was up to us.
Yeah, up to investors that actually look for dividend paying
Yeah.
stocks.
That'll be cool.
All right, so that ends our second episode. Thank you for listening. See you next time. And remember to stay in the long game. Bye, everyone.
Bye.